In April 2026, Claude overtook ChatGPT in enterprise market share for the first time, 34.4% versus 32.3%. A company that didn't exist 5 years ago just displaced the product that defined the modern AI era for the businesses actually paying for it. At the same time, Anthropic filed confidentially for an IPO on June 1, targeting a valuation of $1.75 trillion. That's larger than the entire market cap of Berkshire Hathaway, larger than Saudi Aramco's IPO, and it would make Anthropic the most valuable company ever to go public at the moment of listing, on revenue of $47 billion annualized. Now, how you think about those two facts determines whether the Anthropic IPO is the opportunity of the decade or the most expensive ticket to a show you have already missed. My name is Phoebe, and you're watching TradingKey. How Anthropic went from zero to $47 billion in revenue. The revenue trajectory is where this story starts. Anthropic was founded in 2021 by Dario and Daniela Amodei, along with several colleagues who left OpenAI over disagreements about the pace and safety of AI development. The company spent its first 2 years building Claude with relatively modest commercial traction. Then something shifted. At the end of 2025, Anthropic's annualized revenue run rate was $9 billion. By May 2026, that number had reached $47 billion. A 5x increase in under 5 months. In Q1 2026 alone, revenue grew 80x on an annualized basis. Dario Amodei himself described it as crazy. He isn't wrong. No technology company in history has scaled revenue at this pace on this base. Interestingly, the driver isn't consumer adoption. Roughly 80% of Anthropic's revenue comes from enterprise customers, compared with about 40% for OpenAI. These are businesses paying for Claude's API to power their own products, and they are paying at scale. Claude Code, Anthropic's AI coding assistant, crossed $1 billion in annualized revenue within 6 months of launch. That single product would be a meaningful standalone business, and it's just one line inside Anthropic's income statement. What matters about the enterprise revenue mix is stickiness. A consumer switching AI chatbots costs nothing and takes 30 seconds. An enterprise that has integrated Claude into its development workflow, its customer service stack, or its financial analysis pipeline has switching costs that are real and rising. The 80% enterprise revenue base is not just large. It is durable in a way that consumer revenue is not. The profitability milestone is also significant. Anthropic told investors it expects to report its first profitable quarter in June 2026. For a company that was burning cash aggressively through 2024 and 2025, first profitability signals that the unit economics have reached a point where revenue is outrunning infrastructure spend. That is not a given in the AI business, where inference costs are enormous and competition keeps pricing under pressure. Why Amazon put $25 billion in, and what that means for investors. Most coverage of the Anthropic IPO is missing the most important context: who's already backing it and why their motivations matter. Amazon has committed up to $25 billion in investment in Anthropic. Google has also made substantial investments. NVIDIA supplies the Blackwell GPU clusters that power Claude's training and inference. 3 of the most valuable companies on Earth have written enormous checks into Anthropic, and the reason is not entirely altruistic. Now, the mechanism is straightforward. Every Claude API call runs on compute infrastructure. At Anthropic's scale, that means tens of billions of dollars in annual cloud spending flowing through Amazon Web Services and Google Cloud. When Amazon invests $25 billion in Anthropic and Anthropic signs a multi-year compute contract with AWS, Amazon is simultaneously a shareholder and a vendor, capturing the revenue on every model inference. The same logic applies to Google. For NVIDIA, every Anthropic training run requires hundreds of thousands of its most expensive chips. For investors who already hold Mag 7 stocks, this matters. Anthropic's success doesn't require you to buy the Anthropic IPO to benefit from it. Amazon's cloud revenue grows as Claude scales. Google Cloud's backlog expands as Anthropic commits more compute and NVIDIA ships more GPUs. The Anthropic story is partly already embedded in three stocks you may already own, at multiples far below what Anthropic itself will ask at IPO. The Microsoft angle cuts the other way. OpenAI is Microsoft's AI partner, and Claude has now overtaken ChatGPT in enterprise market share. If that trend continues, it applies indirect competitive pressure on Microsoft's AI commercial narrative. Not an existential risk, but a variable worth tracking for anyone with a large MSFT position. What its target IPO valuation of $1.75 trillion actually buys you. Anthropic's current valuation from its May 2026 Series H funding round is $965 billion, with its target IPO valuation between $1.75 to $1.8 trillion. At $47 billion in annualized revenue, that's a revenue multiple of roughly 37 times. Three comparisons to anchor that number. OpenAI is valued at approximately $852 billion on a similar revenue base. You're paying a roughly 2x premium to own Anthropic over OpenAI at the IPO target price for a business that is winning the enterprise market share battle right now, but operating in a category where model rankings change quarterly. NVIDIA trades at approximately 30 times trailing revenue, but NVIDIA generated $120 billion in net income last year. Anthropic is expected to report its first profitable quarter in June. These are not comparable businesses from a profitability standpoint, yet Anthropic is asking for a higher revenue multiple. In comparison, SpaceX is instructive, and not in a flattering way. When SPCX listed at $1.75 trillion, every independent valuation, Damodaran, Morningstar, PitchBook, sat below the IPO price. The pattern with mega IPOs is consistent. Meta debuted at $104 billion and fell 38% in its first 6 months. Saudi Aramco debuted at $1.7 trillion and fell 15% in its first year. Uber debuted at $82 billion and fell 35% in its first 6 months. In each case, the real retail entry point came 6 to 12 months after listing, not on day one. On the valuation, $47 billion in annualized revenue that grew 5x in 5 months is genuinely extraordinary. But paying 37 times revenue for growth that has existed at this rate for under 6 months requires a specific conviction. You need to believe the growth trajectory sustains through 2027 and beyond, that margins expand as the model matures, and that no competitor, OpenAI, Google DeepMind, Meta AI, or a model we have not yet seen, closes the enterprise gap before Anthropic's revenue base becomes self-reinforcing. That conviction may be correct, but it is not the same thing as certainty, and the IPO price will not leave room for error. Should you buy the Anthropic IPO? What to watch before October? At a $1.75 trillion IPO, institutional allocation will absorb virtually all of the available shares. Most retail investors will not get meaningful access at the IPO price. The real decision is what you do when Anthropic starts trading on the open market, likely in October 2026. Let's talk about 3 likely scenarios. Scenario 1. Anthropic's June quarter delivers first profitability, and the S1, once public, shows expanding gross margins and a clear path to sustained free cash flow. In that case, the valuation argument becomes more defensible. Profitable AI businesses at scale are rare enough that the market will pay a premium to own one. The stock probably trades above IPO price in early weeks on institutional demand. Scenario 2. The June profitability lands, but gross margins are thinner than expected, or the S1 reveals customer concentration risk, a handful of large enterprise contracts driving the majority of revenue. In that case, you have a growth story with execution risk and the mega IPO pattern of a 6 to 12-month dip before a real entry point becomes the more likely outcome. Scenario 3 is the competitive one. OpenAI lost 13.7 percentage points of enterprise market share in a single month in April. That kind of rapid shift suggests the category is still fluid. If OpenAI responds with a significant product upgrade before the Anthropic listing, the enterprise share lead that justifies the premium narrows quickly. Which brings us to the 3 things to watch before October. First, the June quarterly result. Does Anthropic actually deliver first profitability, and what are the gross margins? Second, the public S-1 filing. When it becomes available, look specifically at customer concentration, burn rate trajectory, and how Anthropic accounts for its Amazon and Google compute agreements. Whether they are treated as arm's-length market rate transactions or related party arrangements will matter. Third, OpenAI's product roadmap. Any major enterprise announcement from OpenAI between now and the Anthropic listing changes the competitive context of everything in the S1. The honest read on Anthropic's IPO. Here's where we currently stand. Claude beat ChatGPT in enterprise market share. Anthropic's annualized revenue hit $47 billion and grew 80x in a single quarter. The company expects its first profitable quarter this month. None of this is projection. The valuation at $1.75 trillion is also real, and it prices all of that in and then some. History says mega IPOs do not reward day one retail buyers. The window that tends to pay is the one that opens 6 to 12 months later, when the lockup cliff hits and early institutional investors take profit. For investors who want Anthropic exposure without paying 37 times revenue for it, the cleanest path runs through Amazon and Google. Both are direct beneficiaries of Anthropic's cloud compute spend. Both hold equity positions at valuations far below the IPO target, and both trade at multiples that do not require Anthropic to sustain 80x quarterly growth to justify. So, where do you land? Are you buying Anthropic on day one in October, waiting for the lockup dip, or getting your exposure through Amazon and Google instead? Let me know in the comments below. Thanks for joining me today. If you found this video helpful, remember to subscribe to TradingKey, give this video a like, and share it with a friend who might just benefit from learning this too. With that, I'll see you in the next one.